look at yesterday's trades real quick. Actually, I want to touch on where gold is at and where the euro is at. That we are in some short bias right now, so let's just review the trades from yesterday and how they panned out. Looking at gold's trade yesterday, we had a short bias at 1320 to 1314. That worked out pretty nicely. I mean, it went, where were we at yesterday, the 3rd? Looking for when we started talking. Yeah, okay, right around here's when we started talking, 7:30, 8 o'clock. I was suggesting a short in between. I wanted to short between 1320 and 1314. That panned out pretty nicely. If you got in on that, very cool. All it's done is really return. And we just had unemployment report come out. Is actually pretty good. Actually, I have the numbers. I did have the numbers. Right. Bear with me. Okay. Yeah, so we had jobless claims were good. They were actually they were a little worse than expected, but not by much at all. ADP was good, really good actually. Industrial production for that's Canada. Nothing wrong with Canada. Our neighbors to the north. Continuing jobless claims, better than expected. Not by a whole lot either. It's pretty muted. Job cuts were lower. I mean, nothing overly drastic. The only thing that was a little worse that just came out was the initial jobless claims. So we'll see what that's like. It was 10th. Previous was 245. Consensus was going to be 240. We were actually 5,000 over that amount. So how does gold and the euro want to respond to that, and the dollar? You know, most of that news is pretty bullish for the dollar, but like I've said, just because something is bullish for the dollar does not mean that the gold is going to fall down, or that the euro is going to fall down, or that the dollar yen or anything paired with the dollar is going to go up. You just kind of have to watch how that price action goes. Compared to yesterday, we haven't really gone anywhere. We had a nice, if you caught this trend yesterday after we got done talking, that was a nice, that trade worked out pretty nicely. Gold is now sitting at 116, or sorry, 1316, 175. It's struggling to want to come across this harmonic level here. We are and continue to be really overbought on the RSI in gold. This volume participation isn't the highest, even though we're closing in a half hour. It's lower than it was yesterday at 8 in the morning. So just be on the lookout for that. On the 4 hour in gold, yeah, same kind of thing up here. The composite index is showing we're returning to some buying level there, but you know, for the most part, the formation of this candlestick here on the 4 hour, and then bring it down to the 1 hour. I'm just cautious about going long and short at this level. I'd only want to go short. Probably 13.12. All right, looking at the euro trade from yesterday, very similar to what gold did. It turned out to be a pretty good trade. We had our short at 120.25 and 120.45, somewhere around there. We did get that pan out. That ended up being a nice 50 pip drop, depending where you got in. A 50 pip drop, a little over 50 pips actually. And all we really did was we had some responsive buying back up. What do we have here? Looking at this, if we look on the daily, all right, on the daily, we have we have double tops. Well, I don't know if you want to call these double tops, but we have tops here that are not being broken yet. And on our actual daily, we have this rounded area here. That middle candlestick, a little elusive. This is a fairly bullish formation. However, drag it down to a shorter time frame. Remember, we were severely overbought all through the holidays, all through everything, and looks like we've got the formation of a double. In fact, what does the 30-minute chart look like? Yeah, 30-minute chart's pretty bearish setup here. We did break above this angle. All right, we have to figure out if that angle is going to hold or not. If it does, then we are going to keep moving up in the euro. But we'll probably come down to retest it, and if it bounces off, then we'll know if we're going to have an easy long bias or not. Otherwise, this is a shorting area right now. Right now, I think really that's the same level that we probably had it around yesterday, maybe a little higher that we wanted. And the stop is really going to be above the high. I mean, that we've got a low risk trade here with a lot more reward down below. We'll have to see how sentiment plays out with that information. Again, tomorrow we have more economic news coming out, so we'll see what happens with this pair. We'll come back to this. Our other trade was the euro pound pair. All right, I've had this up here for the last, I don't know, ever since the 26th. This is all it's done, is bank around in here, and we shouldn't expect to do any different. If we look at where these angles are, and we've had them here for quite some time, price is continuing to respect that. We just keep approaching these oversold and overbought conditions to keep banking off of them. We are overbought up here. Well, not totally overbought. There is that's on the 30-minute daily, flat on the daily, 8-hour. We're still kind of trading in that range. Get rid of that Fibonacci. We don't need that there. And let's bring it down to the 4-hour chart. Yeah, same issue. We're moving up there, wanting some rejection on that. Sure. Okay, and yeah, on the hourly, that's a pretty firm rejection setup going on there. We should really look for this just to continue and tighten up. And the trade gets a little easier the longer we get in here because we can set a number of targets to go long or short. The key here is looking at our oscillators, the relative strength index and the composite index. Again, if you've never seen the composite index, just go to indicators and TradingView and type in Constance. Constance Brown, she is the creator of the composite index. It is very similar to the RSI, except it accounts for volatility and it catches momentum swings that and responds to volatility and momentum better than the RSI does. But you should use it with the RSI because the two, when they are confirming certain levels and similarities in structure, visual structure, if you see, let's see, pointing at it. You can't see what I'm pointing at. I've indicated, these lines here, these horizontal lines show that we have similar structure in our oscillator. These peaks, is there selling when that happens? Sure. When it repeats itself, do we have? Yep. Not similar in structure, not similar in structure. And really, we really only want to go short using the composite index when our red line is above the green and the yellow, and we only want to go long with the composite index when our red line is below the green and the yellow. All right. The green and yellow lines are moving averages of the RSI. So that's what that is. Okay, so the euro pound trade yesterday, we wanted to go long at where were we? Third. 1-3 at. Okay, here's where we were yesterday when we got done talking around 8 o'clock. It was closed at 88.798. We wanted to go long before that, so that worked out very nicely. Our stop was when the 1850s, so if you're still active on that, that's good trade. I would consider taking some profit up here and reversing to go short. But yeah, this is, and again, I really like the euro pound pair a lot because it responds to structure a lot better than some other instruments, especially the euro and the dollar yen. This pair likes to follow technical analysis to the T. Not to the T, nothing's 100%, but it's pretty efficient at that. So that was a nice trade that worked out. God, I got itchy nose. It's so dry here. The pound dollar. What do we got going on here? Trading views not wanting to really load much. Anyways, pound dollar yesterday when we were visiting, we talked about. Yeah, probably right when we were getting done talking, I talked about going short at 135.64. That panned out really nicely. Probably in the beginning of our conversation, maybe. Still turned out to be a nice trade. If you took profit, congratulations. We probably, I'm considering a entry here on short again. I guess I don't need to be that picky. Short at, I want to do that at 1.353. Again, I'm not a huge proponent of Head and Shoulders, although every time I say that, the odds are that they've panned out over the last few weeks, couple weeks maybe. So here we have a possible setup here. I would not chase these, but we did bank off of a historical resistance area in our oscillator. So, and I think on the daily, what I have there is that divergence line up here. Yeah, I drew this very noticeable divergence in the RSI and price, bearish divergence. So be aware that there may be further down momentum here because we're still in these top levels from where it was trading. That trade yesterday worked out pretty nice. Didn't hit a stop if you had it all the way up there. It could still run. And let's go back to looking at gold now. Gold, all right. We are definitely off of that level quite a bit. That is a fairly big rejection right there. If we zoom in a bit, where is our price action happening here? Yeah, definitely a lot more selling. There's a high volume bar here. This lot of little spinner here, lots of wick on both ends. This, depending where this closes in the next 15 minutes, will be telling. Otherwise, I still have a short bias. Um, did I put 2018 up there? Oh, good. I just got used to writing 2017 back in September. Always takes me 9, 10 months to get used to writing the year before it changes again. We notice kind of have this moving trend line down. It did bust above it. I didn't draw one there, but we're in this bit of a triangle formation we've got going on. Excuse me. Uh, if we break below 1308, that's going to be pretty significant. We'll more than likely. I was pointing out yesterday that we'll test the angle here. It's the 1300 level. Again, you have to determine your profit targets, and my stop is still at I'll say 1320. Low risk trade there. The euro, back over to the euro. It's still indecisive what it wants to do, where it wants to go. This is a bullish. It's a bearish candlestick formation happening. It's going to close in 14 minutes. But we have just seen over the holidays this just rise up. It hasn't done anything but go up. It's really avoided all other kinds of analysis and probabilities for going lower. So we have to continue to have a guarded stance with a short bias. But the style of my trading is I'm a slave to it. I have to follow my style of trading and my approach to trading, and I'm going to continue to have a short bias as long as we have these excessive levels in our oscillators and we are so accelerated in time and price. Now, what that means is that having a short bias until something resolves means that this could just stay at this level for we could consolidate up here, and our levels down here could calm down and move back into a mean range. Same with price. That would be totally normal. But for the time being, I still have a active short bias on this pair, and it looks like it wants to maybe try and shift and touch up and beat the highs from last year. We'll have to see how much conviction buyers are going to offer here. But you can bet your butt that a break of last year's high is going to be a big move up. It's going to hit a lot of stops the higher this thing goes. So how high will it go? We're looking at the law of angles, and Gann said that when you break an angle, you're going to move to test the next one. Did I draw that in? Okay, no, that's the next cycle 45 over there. We're still above this 45-degree angle, the sloping down angle. So how price should treat this is it should want to, trade down along it until it reaches probably this angle here at this confluence of time, price, and momentum. Otherwise, it's going to have a fairly big move to the top side to get back in line with a upwards sloped 45 angle. But the next angle this would test is, it's up by, let's go check it out. It's up here. It's in the right before 122. That's where our next angle is. We have this trend line that's been going on for a while off here that was tested and rejected, but we may want to go up and test that again. We'll see. Again, there's been a fairly consistent and constant move to the top. We are at a historical period of price resistance. So we need to be careful of where we are. Let's see, actually, I think we made that, beat the yearly high yesterday, maybe 120.70, and we got to 120. What's that say? Yeah, we touched above it a little bit. So it's like we're wanting to revisit that area here. We'll see. It is very, very overbought on the daily and the CMI 8 hour as well. We just re-entered that overbought area. But any breakdown from here, we may touch up and test the 120, 125 trend line. That may be another entry to short 1.21. 36. And then a long bias if we get down to this confluence of trend lines. Want to short until we get down to about the 120.21 area. Only if the oscillators are deep in oversold territory. All right, because there is supportive structure here. We haven't broken those lows over the last couple days, and that this intersection here is supportive. We have supportive levels at the this Fibonacci level in our Gann box. Excuse me. So just be aware of that. We may want to switch to a long bias at some point, but for the time being, I don't see that as the best option. People who are consistent, constant Elliott theorists are going to probably look at this and suggest that we have the end of a fifth wave coming up, and then we have a corrective phase. We'll see how that pans out. We would really need to get above the high of the second to test that theory out. Back to the euro pound. What do we got going on here? Well, it looks like euro showing strength on all the pairs. Again, this is a touchy area. We'll see if it really wants to pull out of this or not. The short is still a good signal. We'll have to see, though. It may be. We'll have to see. Pound dollar. Pound is showing a little bit more strength against the dollar. If this closes here, that's a pretty bullish. Let me close this out here. That's a pretty bullish formation we've got going on here. And then swing down to the dollar yen. Now everything's moving up together here. The dollar yen did hit a little resistance. Did I do a trade on the USD JPY? Long only at a break of 112 yesterday, 112.46, which we did get, and so that trade would still be active. Let's see, the third we broke up. What did I say? 112.46 in a retest. So if we go look at here, okay, we ended talking, went up to the 46 line, came back down, and yeah, that would have broke above this angle we were talking about. Yep, that was a good trade, worked out very nicely. The only one that's been kind of thwarting us on short and long time frames has been the euro. But I mean, nothing's saying these guys can't move together. The dollar yen pair continues to move up. The euro continues to want to move up. That dollar strength is not showing a lot of effect right currently on the pound dollar pair, but you know, it's still still in a falling formation here. Our area of control, point of control right here, is at 135.20. You got to look out for this. Is probably the most important trade to pay attention to right now. Is that look at that volume profile on the right. All right, there is this gap, this vacuum. In fact, between 1335.20 and then down to, well, we'll say 134.4 and 134.5, there is significantly less traded volume at this price level than our point of control at 135.20. What that means is that price likes to move in the path of least resistance. Obviously in an uptrend, if you haven't traded in a certain price level above the price for a long time, then price generally a lot of times will just kind of shoot up a whole bunch. Or if the price has not traded below a certain price level for a long time, it'll just drop down a lot. And that's a lot of times the price action theory behind volume price analysis and volume at price analysis is that these are like vacuums. It will just suck price into it because there's nothing to support it. Especially this zone of 134.80 and 134.91 or 135, we'll just say. So any break below that should give a pretty big move down till we get to about 134.50. So just be on the lookout for that. Let's go back to our euro pound pair. How are we doing? Yeah, still respecting that angle. Euro dollar, we're getting 4 minutes into the close here. Tried to push higher, just hasn't. It did make a little high compared to the hourly before it, but we're still wanting to move lower, it looks like. Really, if we break the 120.50, this should have a pretty quick collapse. And a break below and a hold below 120, even though we have a lot of supportive buying here. Oh, we have supportive buying from the beginning of the holidays to now. It's not a real honest price movement, but none of the holiday moves really are ever. But we'll have to see how this pans out. Again, I was talking about. I left my notebooks upstairs. I've been talking about the importance of Gann's dates. So January 2nd through January 7th. Those are two of the most important dates in the entire trading year. Not just because it's the beginning of the year, but because the highs and lows that are set in January typically will be the highs and lows that you will highs and lows set in between the 2nd and the 7th, around that area, are going to be the highs and lows for the year. And basically, whatever the low price is trading above, whatever the low was after the 7th, then we can consider price to be in a bull phase. If it can't get above the high of the 2nd to the 7th, then we can consider it to be in a bear phase. All right. Again, this pair, this is very uncommon, but the euro has only gone up for 1 year. It has just gone in one direction. It has gone up from the low of, what was it, $1.02 or something, come on, trading view is. I get warnings on my trading view now because I have, it says warning, you have 1,000 drawings on this saved chart. It's not just this chart, but my entire watch list. I have a whole bunch of drawings. But the low that was in December of last year at if you can believe this, it was at $1.03. But then on January 1st, we were trading at 103, or the first trading day of the year. We did not breach that low all year. Now, if we go back to that was 2017. Let's go to 2016. Oh, 2016. I'm having a difficult time reading my calendar. Okay, 2016. How did this plan out? Okay, starting here. So at the end of the 7th, we traded up here, and once price returned to it, it really stayed above it for almost all of February until we got halfway in between. But once it fell below it again later on in the year, it stayed below. In October, it just stayed below. It tried to get back up to that level, but it stayed below. So these levels that you end up seeing on the highs and lows between the 2nd and the 7th are really important. They're going to be like that for everything. We'll go over our Forex trades real quick again before we jump on over to cryptos. TradingView must have a lot of activity going on somewhere. Yep, we're looking like the euro. We just closed the hourly. Definitely double tweezer top here. Didn't want to hold. That's pretty good volume. We'll see if we get some further breakdown there. Euro pound did find some support right there. Did not close above the line, opened slightly below it. We'll want to see how price responds above this angle. We are in these overbought areas still on the hourly. We'll see what kind of participation is there. The pound dollar, yeah, I feel like that's a safe short. If I have that on there for today's trade, sorry. Yep. Dollar yen. Really, I am comfortable holding my long from yesterday until I moved it into slightly above break even. But we should test this angle up here. We should test up into 1300 at least. So I think any pullback to 112.70, between 112.80 and 112.70. Good areas. Even further down, we can have a pretty good look at this. If you see gold and the euro not holding any more higher prices, even though the gold, euro, and the dollar yen pair are both in overbought territory and they're both trending up, if you see the gold or the euro falling down farther, that just is really going to propel the dollar yen pair a little higher. All right. So look over these real quick. The New Zealand dollar. Ooh, yeah. I think we talked about this short yesterday. Actually, that's going to have a nice little short opportunity below or at 7110. Oops. If we get back down there. Okay. Let's look at our cryptos. Good old Bitcoin. Okay, so what did we see yesterday? What did we have trading on yesterday? Yeah, long anywhere between 15 and 1250. Sure. Yep. That's really if the support of ARC has turned out to be a nice place to buy on support. We went up nicely on Tuesday, and we just kind of traded around the 15,000 area on Bitcoin. Fell below this 45, but we found support on this. That's very good. So, the price action really is going to say that we're going to move up, and probably towards this confluence of time and price, find a little resistance at this arc, but Bitcoin is still just going to want to go up. And our first profit target area I have set is at 16,660. I'm just going to copy that because that is still the active one. Really, what have we had happen since? A little slight movement down around that happened at 2 in the morning. It's near the London Open, and just you know just slight retracement up here. I don't really see much action going on with this today. We'll see. Litecoin has been kind of the laggard, and really a lot of that has to do with the flight of capital from Litecoin into Ripple, Cardano. I've been in Cardano for months. That has been one of the greatest trade and investment decisions of my life. Ethereum. This guy is just, really. Uh, any this is going to go to 1,000. It's not. I mean, if you can just see these, bull flags upon bull flag, nothing says that it won't happen again. Again, these overbought conditions really don't matter when we're so close to that 1,000 level and we're at all-time highs. Long anywhere. We'll say between. We'd like to see some supportive buying on this arc, so like 945 to 990. Those are all good zones. This is Ethereum has a really nice chart, except for this business over here. This has had some really nice movement. Just continues to do its thing. One of the I don't know if you really can consider it an altcoin anymore, but ADA Cardano. This has one of the most beautiful charts I've ever seen. I really, really, really love this chart. If there was a chart for beginners that they should trade off of, this is that chart. It is just very, 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 very structured. We have made huge gains ever since December. I have been in this guy since, we're pretty much since it. I got in high over here. Yeah, I've been in there for a bit. The returns on some of these coins are just ridiculous. Like if you got in at 20, where are we at? Like 2,500, you put in $100, it'd be worth over $1,000 right now. Those are just wild movements. But this guy doesn't have any indication that he's going to come down anytime soon. It's actually the 5th largest market cap coin, and it's cheap. It has a large circulating supply, but it's cheap compared to its peers. So is Ripple. Ripple's at 375. It was at it's gone up a boatload over the last couple of weeks. And Bitcoin is still wanting to move up. I don't think you should consider Bitcoin out of the picture anytime soon. That still has a lot of value. In fact, I drew. When was this? Is that 8? I did that, maybe? I think so. I have another client I do some analysis for, and I think I use it on this one. We'll see if this loads. TradingView is notoriously slow right now. Any day now. Yes. Maybe. Okay, yep. All right, so one of the ways that you can tell how healthy an instrument is moving is by taking some graph paper. If you can get it, you can order it on Amazon pretty cheap. It's I I think I've shown this kind of stuff to some of you before, but all right. So this is, I've spilled coffee on this. This is called 8x1, eight squares per inch graph paper. This is what the old school guys used to use. And if you see in the very corner here, right where I started this euro chart, you get yourself a square, and you start from the exact creation point of the opening trade of any, it doesn't have to be anything fancy, just a square like this. And then you draw a 45-degree angle. So I did that on Bitcoin, and I started off at the actual zero. I don't know what these dates were. These were not actually trading dates. I had to do a lot of searching to determine which was the official trading date. So this, it doesn't look like it, but this is a 45-degree angle, even though it looks like it's more like a 70 or a 80-degree angle. But software doesn't render angles as accurately as our, well, charting software doesn't render angles as accurately as our terrestrial charts do. Terrestrial just means like not on a computer. So if I fast forward in time here, see this angle right here? Where did the all-time highs of Bitcoin get halted? Where did they get halted? When price intersected a period in time with momentum. It was halted right on that 45-degree line. Now, I don't know if you'll ever see this anywhere else, but this is what this says is that Bitcoin, and consider Bitcoin no longer a coin unto itself. Consider Bitcoin to be a representative of cryptocurrencies as a whole. But what this says is that essentially Bitcoin has never entered in a tradable bull market yet. It has not. It's just been in an accumulation phase since it started. It has not entered a zone worthy of consideration for long-term trading. It has not even entered a structure worth working on yet. But we're really close to it. We're just below it. We're, not that far away. We had a normal response to this historical high at this 45. We had a normal response, which is historically always a 50 or greater percent reaction, and that is what we had all the way down here. This is essentially a 50% reduction from, let's just estimate that we were at 20,000 and we didn't quite get to 10, but we were at like 10,400. All this means is that price is going to continue to move up until it reaches it again, which at that point, on that third test, it should blow it up out of the atmosphere, and then that 45-degree angle becomes the most supportive line in the entire continuing history of this instrument. All right? You will see how strong this gets the longer you watch this new instrument. So anyways, that's going to be pretty cool to watch and see unfold. Hopefully it does. What's the move that might bring it on? Maybe some type of inverse head and shoulders. We'll see. But that's the Bitcoin move. Ethereum is doing its thing. That's going to get to 1,000. Awesome. Very cool. Anyways, I am a little bit beyond what I normally speak, but that's probably going to be the normal. I'll probably be with you instead of a half hour. We'll probably be shooting around 45 minutes to an hour. And that is fine with me. Anyways, I hope you guys have had some luck with these trades. I hope they've helped out and been profitable for you. Again, make sure that you don't take what excuse me. Don't take what I say as the gospel. I just want to provide you with some tools that can help supplement your own trading and analysis. And please let us know if there's something else that we can do to better serve you. After all, if you're subscribing, you're paying for this service, If you're on a trial membership and you're thinking about paying for this service, you know, I want to make sure that the information I'm bringing to you is stuff that is going to be helpful, useful, and relevant. Um, I don't want to talk about things that are trading traps and very stupid systems like moving average crossovers and subjective arbitrary Fibonacci retracements, or drawing harmonic animal patterns on charts. I only want to give you stuff that I know has worked for me, stuff that is reflective of the natural movements of the market and is going to help get you into profitability. Have a great rest of your day. Have a good Thursday, and we will see you tomorrow on Friday.